Alright, this is the XPX20 year. I just have it on here to show the Fibonacci from the '09 low up into the 15 high. I've been talking about the 1788 area at the Fib A236 for a while now. I've been waiting for it to get back tested to see what kind of action we would get there. We seem to drift lower and lower each time, but we have yet to reach it. On a 3-year, we can see this trend and how it's continuing. Price does allow for it to test down into the trend line and into that 1788.29 without breaking the channel low right about at the beginning of March, the end of February. So something to think about. Right now we're bouncing, but we can always see that swing lower. If we do go ahead and we draw this out into a channel and we just put it at the highs, we can see that it fits pretty well right across the top as well. So it is a valid channel to be looking at. We broke over the 23.6 of the channel here on the SPX. Currently the ES is trading about 25 points higher, so the SPX would be trading about 1889 or so, right over the top of that 23.6 of the cyan there, shorter term. So we'll have to see how price opens on the SPX tomorrow to really judge via the fibs what's going on. If we come down into a shorter term, we can see that the 38.2 here of the channel is also downtrending right at about 1900 right now. And then we can go ahead and we can put a Fibonacci retracement from the last peak down into this low. And we can see that the 50 of the short term is at 1878 and the 61.8 is at 1894. And that'll be a really interesting range to watch because those are usually the two toughest Fibonacci levels. And we also have it coupled here with the 23.6 sitting almost dead flush in middle. So if price can break over this rectangle here from 78 to 94, it'll be interesting. I would think that we would see a push up through volume or up through price to test into this 38.2, which we seem to be having an issue with on the last two back tests. We just can't seem to hold price over the top. So that'll be a price to watch if we do break up. If price does reject this area, downside tests would be 1862, 1842, and then again down into the 1810 range where we've made these last couple bottoms. A little bit worrisome to me at least, and it does break some of the rules of the pattern. But if we zoom in here, let's just get a little bit closer. If we come in here to a 1 year, we can see the development of what I would call a head and shoulders pattern, except for the fact that most head and shoulders patterns, the shoulders should be at the same price point. What it shows is rejection at a particular price. What we're seeing here is rejection of price here, and then we bounce out of it, and now it's come down, and now we can't even break the lower range of price. So I'm unsure if I can call it a head and shoulders pattern, but for now at least it seems to be reflecting the actions of one. We can see again that it's a perfect channel from the tops here. If we redraw it as a channel, we make multiple touches to the bottom of range. And now we can see here in the shorter term that we've come back and we're about to test the 50 of this smaller channel. So without calling it a head and shoulders, you can definitely see that there's similarities to a pattern such as that. It'll be very interesting if we do ever break down out of this channel because a pattern of that magnitude would have quite a flush. The top head is at, call it 2120, while the neckline sits at 1853. And it's 55% of the move, so you're talking about a 146 point breakdown in the SPX if that were to validate itself and break lower. But for now it's just an idea, but it is kind of keeping me from putting on a couple trades, so we'll have to watch that. If we go into the NQ, we can see on the 3-year NQ that we have a bit of a volume null here. We'll need to put a bit of a bottom on just so I can see it. So we're sitting here in this node from about 40.33 to 40.91, kind of like we are in the ES. So if we do break over that, we test 40.91, break below, or break above 40.91, we test 41.32, a break below 40.33, and most likely we come back down and we test where these spikes are and where the shorter term Fibonacci levels would be. Such as that. So we're rejecting the 50 right now. Let's make this a different color. Alright, there you go. So we're rejecting the 50 of the shortest term at 40.85. We'll want to see if 40.69 holds there at the 23.6. If it can't hold, then a test back down here into the bottom of volume at 40.33 as well as the 38.2, and then a move down into 39.67.75. We switch over to the Russell. I feel like the RUT is certainly the weakest in terms of price structure. You see that when we went on this big move through 2013, there was almost no volume established here within this range. And we can see what has happened on the breakdown. It's just a flushing through this node or this null. I would expect for this flush to continue until we come into some volume. I don't think that this little spike here is going to be able to contain volume or hold volume. I would expect to see a test back down into these previous double top high here, as well as the development of volume. And extra special bonus if I can get it down here into the 817 range. You can see not only is that the longer term 50, but it's also the high volume node here on the longer term chart. So anywhere in between 780 and 820 I think would be a great range to buy here on the Russell. I'll definitely be watching. I'm actually just going to set this alert right now. So certainly something to watch on the Russell. So for right now, it seems though that swing positions aren't the way to go. I've tried I've tried 3 swing positions in the last 2 weeks, and none of my swings have ended up working, but every time I scalp, it's been a W. So definitely a scalper's world right now. We'll get more directional bias here tomorrow when the market opens. Again, 1878 to 1894 should dictate the overall direction of trade. Above, we test 1914 into 1934, and below again 1842 into the 1810 area.